Hi, this is Charlie giving you Monday's video, and I hope you're very well. Firstly, there's not going to be a Friday video this week, not live trading video, I don't think. Well, Kim and I are away on Friday, so I'm not around to do any live trading on Friday. But if I can do anything, the only other day I have available to do a recording is Wednesday, so I'll probably do a recording of something or other on Wednesday and then get that out to you, so it'll be set up to go out on Friday anyway. But there won't be any Friday live trading as such. Okay, so this is an interesting one. I've put this onto an hourly chart of the euro dollar. Now, actually, first of all, start off with the daily chart. We can see that overnight we've had this big move down as a result of all of the political maneuverings that have been taking place with Greece over the weekend. Now, what was interesting was on Friday, a trader asked me whether they should stay long. I think they, for whatever reason, they were long on the euro dollar, and whether they should stay long over the weekend, because what they were doing was thinking that if there's a resolution comes out over the weekend, then they could make a lot of money, because then potentially the euro dollar could have had a 100 pip up move once the markets opened on Sunday night. But it was, like I said on Friday, that's the wrong way of looking at the markets, because you're looking at how much money you could potentially make rather than looking at how much you could potentially lose. And that's what's more important. It's risk management. So not how much money you can potentially make. You can make money elsewhere. But the risk is too great going into a weekend when there's this whole resolution. Is it going to happen? Is it not going to happen? And look, if let's for argument's sake say that trader had have stayed long into the weekend, they'd have then taken a 200 pip. This was a gap, and it gapped most of those 200 pips. So certainly a good 150 pips. It gapped. I haven't looked at it exactly. 160. Yeah, about 150 pips. Just looking at it off screen. So that would have been not a very nice stop out, because you wouldn't have got stopped where your stop placement was. You'd have got stopped where the market opened, which would have been 150 odd pips at least. So and if there wasn't a lot of liquidity down there, it could have still been a little bit lower. So a good reason to not try and speculate based on those sorts of events like that happen over the weekends. It's just too much speculation. So and hopefully that trader, hopefully they took my advice and didn't stay long euro into the weekend. We shall find out, and as we go through the week, I'll find out whether that trader did actually quit and come out of their euro long. Anyway, what we have seen is the euro dollar's come down, or as it did a big gap, then gradually, it's an hourly chart, bear in mind, gradually overnight and into this morning, it's been coming up. So it's retraced a good portion of that down move. So we'll see. We've got the gap still yet to fill, and so maybe that's what it's ultimately going to try and do is fill that gap there. But I don't have too much of a view. In fact, remember last week I actually said, look, the euro potentially could have that run back up into this zone, up into the 114s again, provided it doesn't come down and close below 111, which obviously it still has yet to close below 111. So we'll see today where we finish up. We're sitting at 111 right now, but I think it was 111.50. Sorry. So we'll see if it does close below there. But it's definitely looking technically that bit weaker now. So we'll see, but it's certainly looking that, and aligned with the fundamentals as well, that it's looking that way, that it might want to start to continue to roll over. But I'm keeping pretty much an open mind at the moment either way, and so I'm just trading what's in front of me, and I think that's the number one thing to do when you're a short-term trader, is just trade what you see, trade what's on your screen. Don't try and trade what you think might happen in relation to events and news and fundamentals. Just trade what's in front of you, and when they marry up, great. But when they're not married up, well, you just trade what's in front of you, or you don't have to trade. Remember, cash is not a bad position to have at times. I'll leave that with you. Have a good week. Back in touch soon.